Hi friends, Professor Joe here. I hope you all are doing great and welcome to this video. In this video, we are going to see the second important aspect of income statement. The first important aspect we have already seen in the previous video, that is the trading account, and what kind of entries are entered into the trading account. In this video, we are going to see what are the entries that are done in a P&L account, what are its importance, and what are the areas that every single investor should look very properly to make sure that the P&L account is showing the right profits of the company and not the blown up profits. This is how the format of a P&L account looks like. On the left side is the debit side, where all the administrative expenses are entered. Administrative expenses like rent, electricity, marketing expenses, depreciation, and even the taxes. And there are many other expenses. All these expenses are entered on the debit side of the P&L account. And at the bottom of the P&L account, the profits of the company are shown. Now, the profits of the company are shown in different ways, like EBITDA. EBITDA means earning before interest, tax, and amortization. The next is PAT, profit after tax. Next is net profit. So, an investor has multiple ways of looking at the profit and deciding whether they have to invest in this company or not. But before we look at the net profit or the other kind of profit, we should also look at what are the earnings that the company is showing, which is on the credit side of the P&L. So let us have a look at the credit side of the P&L. On the credit side, that is the right side of the P&L account, which is where all the different kind of income is shown. The first type of income is income from operations, which is shown in the form of gross profit. Now, this is the best type of income for a company. If a company is making good gross profit, the company is a really good company. The second type of income that is shown is income from investments. So, when the company had a lot of funds, they invested it into different financial instruments or properties. And if they're getting interest from those investments, or they are selling some of those investments and getting money from those investments, that is shown as a form of second income, which is income from investments. And the third type of income that is shown on the credit side of the P&L is the income from financing activities. That means if the company is raising funds through different kind of sources, that income is also shown in the credit side of the P&L. Now, as an investor, you have to be very careful because the net profit includes the second kind of income and the third kind of income. Now, the second kind of income and third kind of income that is coming into the company, yes, it is an income for the company or funds are coming in for the company, but those income is not generated from the profits of the company, from the operations of the company. That is why when you see a company and you see that it is showing net profit, you have to carefully analyze all the income sources and you have to remove all the income coming from other sources other than the gross profit, and then you have to check the net profit. That is when you will get the right picture of the company, whether the company is able to generate profits from its operations. This is the reason why this P&L account is very important for every single investor, because this is where the investor can see whether the company is able to generate profits from its operations. This is a good sign, and such companies are the best companies to invest your funds. So friends, I hope that this video has made it very clear why a P&L account is very important for an investor. As an investor in this P&L account, we are not looking for any adjustment factor over here, whether debtors has been reduced or anything else. We are not looking as a management person either, whether cost can be reduced, depreciation was not charged properly, Those things are also not checked by an investor. We are only looking from an investor's point of view, and our main area of concern is whether the company is able to generate profits from its operations. That's it. And if the company is able to generate profits from its actual operations, then this company is a good company and we can invest in this company. Of course, there are many other factors which has to be seen, and we will see those factors one by one in the coming videos. That's all in this video. Thank you.
Friends, I have written a book, Traders You Can Win, but First Learn to Lose. This book talks about technical analysis and my experience in the financial markets. So if you're interested in buying this book is available in Amazon and Kindle. And friends, if you love the way I'm creating content, please like and share these videos. So like you, there might be many others who want to learn trading, also understand the fundamentals behind trading. These videos will surely help them to improve their trading as well as the understanding of that financial instrument. Friends, I have created a lot of videos till now. And in coming times, I'll be creating many more videos, especially in the financial markets and different aspects of the financial markets. So if you're still not subscribed to my channel, please subscribe to my channel and ring the bell icon so that every time I create a new video, you will be the first person to be notified about it. And friends, all I can say is keep learning, keep growing. Thank you. Namaskar.